S&P 500 on a weekly chart, and we're looking at this being a wave 4 pullback into the 1535 area, the wave 4 of 1 lesser degree where this particular line is through here. We also have to be mindful that it could be something larger unfolding to the downside as well, and we'll be keeping our mind open for that as well. But for the short term here, we're looking at just remove this here. We're looking at an ABC correction here, as you know, and we're looking down to the wave 4 of 1 lesser degree, which is the 1435 area, or the 38.2 area that's sort of through here. Yeah, so look, the A wave, the B wave that we've been through, and the C wave unfolding now down to this sort of area through here. We believe that we've got this move down through here would be wave 1 now of that. So as we were talking about yesterday, we were looking for a 5-wave structure to the downside. I think that that's well, we thought that would finish as wave C here and move to the upside. It's probable, but what sort of concerns me about this is that this move down here as a C wave is actually faster than the A wave here, because the A wave is normally the sharp wave and C wave is normally the slow wave here. So we really need to look at this in a 5-wave structure coming down through to here, and then a retracement level through here, and then further downside to come from that point moving further down here. So a little bit sort of rough there. Let's just sort of have a look at that a bit closer through here, and this is it here. So look, sure, it could be the alternate the wave C of wave 4 here, but we don't think that's the case. This 5-wave structure that we've got down through here, probably easier to see it on the cash. So we're looking for some sort of ABC retracement level back into the sort of 1600 area here. It could end up being, you know, just at the 1600 here, or it could be as high as, well, into this sort of area through here, the 1620 and through here. So that's something that, yeah, we need to look at. So that's going to create that that bounce there, and yeah, so then further downside. Just looking sort of here, this is just on the close here on the 2-minute chart through here. So yeah, look, we could have the low end through here, but we just got to be mindful that we could get a move, you know, a small move down here to complete it before we see further upside. But yeah, look, this is the US markets, US 30 here, same thing again. On the cash market, it does appear that the 5 waves is down into this point here, and this is a trend channel through here. So it'll be interesting to see. Normally what happens is that when we get a bounce off here, it comes back into retests this line through here. So that's what we'll be looking at here for any retest at this point, which is also a retest of the medium level here, 15,000 as well, before we see this come further to the downside through here. And as I mentioned as well, we need to be mindful of a larger pattern unfolding as well, because we don't want to be caught out. We need to trade what we see, and so we'll be mindful of that as well. But as it stands, this move here counts better as an ABC, so that makes this a corrective pattern over here. So we should run with that. I know this can be counted down as a ending diagonal, a leading diagonal triangle as a wave 1 here, and we can look at that as a wave 2 here. But we'll soon find out once we get this bounce here and then the next leg down through here if that's the case. Yeah, so as I mentioned before, we've had this leading diagonal triangle here for, you know, since it first began actually. So I'm just keeping it in the back of our minds here. So we'll just see how that sort of pans out through here. But look, we're basically tracking 5 waves down through here that could be completed or close to completing, and then we'll see a retest of this trend line that was support here needs to be tested as resistance. Yes, it can go as high as the 15,000 there, and we'll need to track that wave count back up there. So, you know, going short on it's a little bit like the the London market as well. So with the English market, we were looking at it's moved down a bit further than we had sort of drafted here in the first 5 waves down here, the 1, the 2, the 3, the 4 and the 5 here. But we would be looking for some sort of retracement level in 3 waves, and then further downside as well, perhaps covering this gap down here and also down to the 5.8 as well. So you can see that the FTSE has got further to go within all of this structure as well, and that would also line up to the to the Australian market as well as such. So when we look at the Australian market here, right, so this is just the daily chart here. And what we're trying to do from this high here is trying to count 5 waves down, and we do have 5 waves down to this point here. So we could call this in for the A wave here and the back for the B wave here, but the B wave is just a little bit small for that. So I'm sort of just trying to line things up with the UK market and the the US market as such. So there's a really good chance that this is not the B wave here, but a wave 4 here. And then we'll be looking down for a wave 5 to come down here further, and then we get our bounce back up. But still a bearish picture as such in terms of the larger picture here that we've gone over before in looking for something some type of larger 3-wave correction across here, and we're still looking for this low here. The low is sort of starting to arrive, because you have to remember that this is the first largest bounce that we've seen through here. Okay, so we know that like a ball bouncing, it could slow down into this sort of area now. In terms of trading and looking in it a bit closer here, I'll find where we are here a little bit. So yeah, look, this is just a 2-hour chart here, and I had this as the A wave, and we knew that this was corrective here, and it can be placed as a B wave. But I also like to look at it as a wave 4 now as well. Either way, we'll be looking at a 5-wave structure coming down through here, and obviously there's going to be support at the 65, well, the 44,650 here, the old low here. So yeah, but obviously the cash market that for the ASX 200 here, I just wanted to point out here that the move that we had down on Thursday, as we were expecting a move down as a bear market thing, but it came down on quite a lot of volume through here. Yes, there was some short covering on the close, so to speak, some profit taking, but it wasn't a low volume day, so to speak. So that selling pressure is there, and as I mentioned, the SPY is down at the 46.50 at the moment at this old low here. So we can expect this to move down and find a bit of support here, but we also need to understand that low can be just taken out slightly, and we'll be looking for counting 5 waves down through here. We're also expecting that US market, because it's moved down over the last 2 days strongly, and we're looking in 5 waves, and we're looking for it to bounce back up. So we'll get that bounce back off this area through here on the cash, so anywhere from the 4600 to 4650 through here. Alrighty, let's have a look at commodities. Okay, looking at oil first, and oil's been quite close to 100 there, and obviously oil can and mostly does follow stock, and that's what's occurring now. So we're seeing that resistance come in from the 100 there. We're expecting a little wave to the upside, but we need to recount this situation. We were looking for a wave 5 higher up through here, but because of the strong move down, obviously we've had to revisit this particular wave count that we've got here, and it can be counted in 2 ways. So I've counted it this way here on this chart, and on our website where the oil Elliott wave charts is, it's counted slightly different. Either way is fine, but the main point is that one way or another it's completed, and what we're looking at now in line with the S&P 500 is we need to look at this in terms of 5 waves down through to here, 3 waves back up. The normal is 50-60% back up through here. The 96.50 is always a strong point for oil and other markets as well, even I call it the 65 number. It's a bit like the the Australian XJO at 4,000. 650, so to speak. So that would be the sort of retracement area to look at for that B wave there, and then a C wave to the downside there. The copper market, or base metals rather, is still moving to the downside as sort of we expected. So just coming back up from here, we were tracking this 5 waves down through here, and if we get 5 waves in the opposite direction from before, then after 5 waves we get an ABC correction through here, and then we'll get our next 5. So we're looking at this being a wave 3 down through to here. It's possible that it can be a wave, an ABC and part of a larger corrective move, but because of the new lows here, we're safer to go with this. So we'll be looking for this to complete itself in through to here. Then we'll see a wave 4 bounce, and then another wave 5 to the downside. So as you can sort of see here, in a way, we've got wave 1 to here. In the third wave, we've got wave 1 to here, wave 2 to here, and then we need to look at this as the next degree smaller. So wave 1 here, wave 2 here, and you can pretty much start counting the 1, the 2, 3, 4, and 5 down through to here. But we're looking for a little small bounce. Look, we're coming into the 300 here, or trading level $3, whatever. So, there's going to be buyers in here. There's going to be short covering in here. This is where it gets bouncy through here. So the first bounce off the 303, which is the subgroup 1 here, then that's obviously going to bounce back, but that will be in line with the wave count. But as I mentioned before, the main point here is that the trend is still down, even though we're going to get sort of splats of rallies here, and that lines up with the gold market as well. As you know, we've been looking for this to move down for quite some time, and it's been a bit of a frustration, really. But what do? You just got to work through it. So look, anyway, you can see that this is a really strong third wave here, and we're counting this as the wave 1, the wave 2, and so we're still in the wave 3 here, because in this case here we've got wave 1, wave 2. We're looking for the low of wave 3 here. The wave 4 should pull back 38.2%, but obviously we'll be working with the third closest largest number, and then down through here. So we've had the wave 1, and this is the wave 3. So the wave 3's basically done, so there's going to be series of wave 4s and 5s sort of here. So as waves 4 and 5 will be sort of like the 1s and 2s here, but just inverted and upside down, I guess, coming into here. So what you see is not what you get. So anyway, you got the picture there. So looking for support at, this is quite an important number here, the 1272 here, because it's a 272, and we'll see that play out over a course of time here. It'll become a useful price point to work with for entries and stops and retests and so forth. But what we're looking for here is we're looking for a retest of the 1300 here. When we're working with large numbers, what we need to do is we need to take in consideration the next degree lower, and that would be group 1 above and group 2 below here. That will be the trading range in here. Okay, well that's it. Let's have a look at Forex as well. Okay, starting with the euro this time. We're looking at that wave 2 up the top here to be in place. So as long as that high there stays in place, we'll be looking for a bear market to come to the downside. What we can be assured of, at least, is we can be assured of the 3-wave swing to come into play here. So this move down through here, yes, it could be an A wave, and this could be a B wave, and we could end up with a C wave here. That's possible, but the bias is for this to be wave 1 to the downside through here. In this move down through here, though, if we just pull that apart for a moment, it's a little bit tricky to work out if this is wave 1 to here, wave 2 to here, wave 3 to here. We're going to get a wave 4 to here, as long as it stays under that low of wave 1 here, and then we get a wave 5 to come down through here. So we could still be looking for a wave, I know this is wave 1, but a wave 5 to come down through to here. So, and then we get our ABC bounce. So that's a probable situation. The other one is that this this is wave 1 to here already, and we're looking at our wave 2 to come into play through here. So obviously that's going to be in 3 waves as well, an A and a B and a C here. Remember that the euro can have shallow retracement points, so rallies, so be mindful of that. So what we're looking for here is some type of corrective pattern through here. Okay, so yeah, it's pretty much the short sort of weakness. Now we could do that from anywhere up through here. I mean, the norm is that it would look at the 61.8% retracement level from from this low here up through here, but I just know the euro, it just really has shallow retracement levels. So this like 32.50 for instance would really be a strong point here, and if I was wrong here and this 32 became the resistance at that point, then I'd be shorting from there as well. So we're trying to find a move to the upside. So as I just mentioned, then would be looking for something as this would be right. So and this is getting quite tied up through here now, isn't it? So we can say that that short covering of profit taking there, and we'd look back into here, and then we'd be looking for a move later up here in the next session through here. So that will sort of drift lower through here. If I'm wrong here, then we're working with group 1 here. So normally when a market comes down and bounces back up through here, it fails to find support on top of group 1. So this is group 1 here, the 30. So if it fails to find support up here, which it will, because you can kind of see it was strong here and then it's getting overlapping wave structures here. So it's just the way it is. So just looking for a decent swing, that's all. So just, I mean, it's the end of the session, we need to allow it to unfold through there. But if this if this market just comes down through here and then finds this as resistance in here, then you need to be looking to short from this point here. But we're looking for some type of A, B, and C correction, even within here, and at the highest up into the 50 here, I'm looking for a short from that point there. So just perhaps allow something to mature here, and also line it up with the S&P 500 as well, because we're expecting a bounce from the US indices as well, completing their 5 waves down. So yeah, we want something to work with here for the short, because it's already moved as such. The Australian market, we've relabeled the wave count to make it just a look and the feel of it really. So this wave 1 here and wave 2 here, that's fine, but this move down through here, we don't think that wave 3's completed yet. So the wave 4 the minor wave 4 that we were looking for before here, I think that we need to put that hasn't occurred yet, and will occur off the bounce off the 90 here, or from the 88, 90 back up into that area there, before we have our further move to the downside here. So yeah, there's still more to come yet. So we're looking for this wave 3 here, the wave 4 here, and then a wave 5 down here to complete that structure there. So there's more to come yet, and in this move down through here, of course we're looking at 5 waves from wave 4 to wave 5 here. So if I can just drill into that for a moment. We can see that from the wave 4 here, we've got down for 1 and back for 2, nice strong third wave down, slowing down now. So we'll be looking for a wave 4 to move back, and then wave 5 to move down here for wave 5 of 3, coming in for a bounce off the 90 here as such. So just drilling in here a little bit more, assuming that that's the low there of wave 3, then we'd be looking at this. It was just a bit like the euro. It's a little bit difficult to count because it moves so swiftly through here. And I can count this. I've counted this as a little wave 4 here, and this is all a little wave 5 all the way down to this point here in terms of the 1, the 2, the 3, the ABC for the 4th and down for the 5th here. But I can also see this is also corrective here as well through here. So, it does, I don't know, this is a corrective move to the upside here. When we look at the smaller version through here, which would be this here, this move up here, it just reminds me of being corrective. This one here has kind of got 5 waves in it. So look, I guess in a bit of a nutshell, if the 91.72 becomes the retested resistance, then you want to short from there, or even the 80 in this case. But otherwise, we're looking for a wave 4 rally. So we could have one more shot down and then up, or we could have the low in place here in terms of an A and a B and a C wave back up into here somewhere. So any move up here that fails up here then finds the 92 as resistance, then you want to be shorting from there. The other point to understand here too is that when the 92 becomes the retested resistance, then we can be looking at 90 from that point there as well. So it's not a problem for longer term traders, but there's many traders out there that, well, everybody's trading their own, their own, handling their own risk in their own way. So, some traders are looking for a 3 or 5 point pip, risk. There's others out there looking for, 10 and 20, and others looking for much more. So it just really depends on the degree of structure. So, nail it down to minor levels, sub levels, and so forth. So just depending sort of where you are. But you can see that this, just another little point from a trading level point of view, the move across here is spending more time under the 92 rather than above it. So if that's a continuation of that, then you need to be looking at the short side from that point there as well. So could have a little sort of triangle here, I guess, as well. But that 92 there as the resistance would see the next leg down to the 91 here. Alrighty, well, good morning, good luck, and welcome to the winter solstice.